Okay, we should be live and good to go. I've got no idea why OBS is showing you the wrong screen, but I will attempt to fix that momentarily. 1 second. Yes. Otherwise, let me know about the audio at least, and I should get this fixed pretty quickly. There we go. That should be fine. I'm assuming you can see a Bitcoin chart now. And does it look okay? Are we in the clear? Okay, nice. Thanks for letting me know. So first things first, like the video, subscribe to the channel if you haven't already. Looks like we'll be together for a long time, at least as long as this range. So stick around and get all the fun and very informative content from this wonderful channel. You can see by the titles we really go hard for the algorithm and the clickbait, so you clearly fell for our charms. And also thank you to Blockfolio for partnering with us as part of Technical Roundup. It's been a good week for a lot of altcoins, so you don't need to hide away from your portfolio. Maybe that's going to change this week. But jokes aside, you can track your portfolio, you can trade, you can move around from crypto stuff to stocks to stable coins, what have you. We don't say this lightly. It probably is the best and most straightforward way to onboard into crypto. And you'll be, I think, morally forgiven for starting to onboard people in the 30,000s for Bitcoin rather than in the 60,000s, right? You've at least got that going for you. So be sure to check out Blockfolio, mobile app, all-in-one kind of shop. I use them and I do recommend you check them out as well, not least to support us. Okay, let's chat. So we had the monthly close. There's really not much to be derived from it. We traded below previous month's low, right, when we had that second, the spike of the first capitulation, closed some way above it. But as you can see, kind of looking left, there's no real monthly structure to anchor ourselves or align ourselves with, so really not going to be spending too much time there unless we really start taking a massive shit, in which case we might have to pay attention to some of those really old levels. But for now, there's not much there. I would map the monthly open if I were you, just to keep a perspective on how the higher time frame candles are developing without having to look at the higher time frames themselves. But that's really about it. I don't want to read into it too much. There isn't much going on. Weekly time frame still gonna be the main kind of operative time frame as long as we're in this range. It's certainly been an interesting weekly open, which is one thing we'll talk about. But essentially, same thing as before, right? We know we've got the top of the range at 38 to 40k. We know we've got the bottom of the range at around 30 to 32k. And the market this week has more or less been pinned at or by the midpoint of the range around 35k. So on a weekly closing basis, we haven't touched support in a couple of weeks now, nor have we touched resistance, and it's just really been a low volatility, churn, grindy type of price action at the mid-range. So just as a reminder in terms of how I view these structures, or at least the lens through which I try to make sense of them, is range is made up of two main boundaries: the resistance you have overhead, the support you have below, and then tentatively the mean or the midpoint between those two levels, right? So if we're looking to be bullish or looking to be long, generally speaking, that opportunity becomes available at one of the extremes. My preferred version is to buy at support, because that's where invalidation tends to be tighter, risk reward tends to be greater, and I never get the feeling that I'm chasing price, as opposed to like the likelihood of getting trapped is generally lower. The good old buy low, sell high. So if you're going to be bullish, a good spot to do so is at the range low. Now, whether that's outrightly, if it gets tested, or post-deviation, so once you have an attempt to break down which failed, then you can kind of define your risk more tightly and really cram a lot of size into these setups. Ultimately, it doesn't matter because we're looking to be buyers at support or at the extreme. Let's say you did establish that kind of position, right? Whatever, you're long and the market comes into the mid-range. Now, for shorter term strategies, you can find your first kind of take profit area, first trouble area at the midpoint of the range. So it is the first area to pay attention. But in my view, if you're range trading properly, or if there's enough volatility in the range, you'll generally travel from range low to range high, or from range high to range low, whatever, as long as the market isn't either very weak or very strong, right? So generally speaking, and as we've seen in Bitcoin, you expect opportunities at both boundaries. So what does that mean if we established long positions at the range low and the market reaches the range midpoint? So I mean, if you're aggressive, or if the market's looking very weak, or if you're trading a short-term strategy, or some combination of those which makes you more conservative, you can just take profit and or close the trade at the midpoint of the range. There's really not a lot wrong with that. Sometimes it can be a bit tricky logistically if there's not a lot of space between the range low and the range midpoint, like the rotation itself is too small. You might have to give it some space or consider whether it's worth buying support if you're going to be selling it so close to resistance. But in most cases, if your range is appropriately mapped and you're dealing with like decent structure, there's generally enough to capture between range low and range midpoint. Okay, but more generally, if we're sticking to buying support with an eye to selling resistance, what I try to do is use the range midpoint as an area to manage the trade more so than close it out. So that would normally mean if I'm being defensive, observing the price action, maybe I'll move up my stop or try to find a new invalidation closer to the range midpoint. So in the worst case or the most bearish case scenario that it finds resistance there, I don't give back basically half the move that I'm going for. So it's a place to manage the trade if you want to be defensive. And the same applies kind of aggressively or offensively as well. If you're along the range low, market looks really good and starts breaking through the range midpoint. If you're going to compound the trade anywhere, which means add to your existing position, the midpoint of the range is a decent place to do that. And at that point, of course, given this leg, you have some evidence that your trade idea is correct. And it can, as mentioned in the first example, it can also set you up with a decent invalidation. And the same kind of, the mirror logic applies for the other side, right? If you're short from resistance, the market hits the range midpoint. Same thing. When price reaches this support level, given we're coming from up top, it could be an area where you want to manage the trade, move some stops, or do whatever it is that your trade management allows for. But generally speaking, if the range is going to play out, or certainly in the early portions of a range before volatility gets really constricted, what I like to call the range midpoint is more or less a speed bump more than anything else, right? So the actual high conviction or the better trades are established at the extremes, and then the range midpoint isn't where you derive your strong views. At most, in my opinion, that's where you move some stuff around, do some management, and kind of the next area to pay attention. But in terms of significant trade decisions and actual execution, for me, it's the boundaries that are important. Okay, just thought that framework was necessary. So applying that to Bitcoin, right? If we've got 3840 range high, 30, 32, whatever range low, and then this 35k midpoint, if the market's not testing these boundaries, which it hasn't been, then the likelihood that I put on a position is pretty damn low, right? I like to trade at the extremes, do business at the boundaries. So if the market is not at those boundaries, I'm probably sidelined, right? Even if I want to be very permissive and liberal in my trade execution or whatever, or trade identification, I could, just using my discretion, say, well, look, maybe it's just too bullish to reach support and you're going to get a higher low instead. And maybe the long I have to take is going to be acceptance above the range midpoint. And then maybe I get something risk defined to put a stop in the market. And then the target remains the same at the range high. But the bare minimum requirement, if you're not going to give me a buy at support, I have to at least be able to see bullish price action at the midpoint of the range to then provide some evidence for price trading towards resistance, right? Otherwise, if it's just kind of meandering at the midpoint, it's a coin toss, and I can't justify longing or shorting it, right? So at the very least, give me some sign of strength or imbalance or one-sidedness at the range midpoint, and that will open the door to trade into or towards one of these boundaries, right? And if we look at the Bitcoin chart, and as the title suggests, based on the weekly close and lower time frame price action generally, the midpoint is currently acting as resistance, right? So we had the weekly close literally on top of the midpoint, which is a close at resistance, not through it. And then this is currently a very odd weekly candle because, as you may notice, it doesn't really have an upper wick. You can see if we look at the top left, as I'm hovering over that weekly candle, the opening price and the high are actually the same number. So I know a lot of good traders who actually were trapped by this weekly and daily open setup, because if you just look at all your weekly candles, all your daily candles, whatever, most of them have a wick of some sort. So there are a lot of strategies, and I'm sure you've heard like Jim talk about it and some other people, a lot of strategies rely on that idea that the market will set a high and a low after the open. So normally what you'll get, let's say, you know, the clock strikes midnight UTC, you get a new candle open, right? And this is your, the most common one is daily open. You can get 4-hour open. I know Jim likes those. Weekly open, whatever. Let's just take the daily open example, right? So this ends up being our daily open, midnight UTC, new candle, and this is the opening price level drawn horizontally. And so normally what happens is, working on the assumption that most candles are going to have a wick, the trade that's derived from that is to fade the drive off of the open, right? So if this ends up being our open, daily open, and what the market does is, okay, midnight open and starts driving lower, right? Normally, a short-term setup that you can play within the first couple of hours of the new candle, if we're talking the daily time frame, and obviously less time if we're talking for lower time frame opens, you basically fade the break immediately from the open. So you get like a move in one direction, for example, down with no upper wick. As you buy that dip, ideally into structure of some sort, your working assumption for that scalp is that the probability of a candle with no upper wick is actually pretty low. So the immediate drive you get from the open, in this case to the downside, which sets the lower wick, in the back of your mind you're thinking, well, there's a really high chance that this puts in an upper wick at some point, and very likely in the first few hours of trading in the Tokyo session or whatever you want to call it. So as you buy that dip, the kind of mechanical scalp take profit level is either the daily open itself or a tick above it, right, to create an upper wick above that level. And you get the same with weeklies, dailies, 4 hours, it doesn't matter. The basic premise is that high time frame or just popular time frame candles have wicks on either side. So once you get the open, if it drives up, immediately you're thinking it's probably going to have a lower wick. So if I get an opportunity to sell this or fade the rally off the open, I'm going to do it. And your trouble area or mechanical take profit is almost always going to be where the candle opened or slightly beyond it to give you a wick, right? And the same works to the downside, where if you get a downside drive, you're thinking, okay, this is the lower wick, but there's no upper wick yet, and it's probably not going to stay that way. So once you get your entry triggers or buying structure, your first trouble area is the candle open, right? Or maybe even a little bit above it, just to make sure it sets a wick of some sort. Which is why this weekly open and also the daily open so far caught a lot of those kind of very reliable strategies off guard, because hovering over it, again, you can see the O and the H are the same. So there's no upper wick on the week. And obviously it's Monday, so the same applies for the daily. There's no upper wick on the day. So that's just like an interesting observation. Does that make sense to anyone at all? Did I butcher that explanation? Yes, particular time frame opening does mean something. It doesn't matter that the market is 24/7. We need some sort of system to it's sort of almost like consensus. Like, how do you know a level's been broken? How do you know whether something's a higher high or a lower low? Like, we still use candlesticks, time-based price data, to arrive at kind of agreed upon conclusions. The fact that the market doesn't stop trading doesn't mean that the utility of candlesticks disappears. Also, you don't need to add like 6 question marks after your question. Like, you might think that makes it more urgent or insightful, but I assure you it has the opposite effect. You can just ask your question, I'll answer it. You don't need to start waving red flags and shit. Okay, that seems to make sense. Let me open up the chat in a more convenient. So what time frame is prioritized? Depends on the time frame you're trading and the setup you're trading. There's no one magical time frame. Generally speaking, weekly closes, daily closes are your higher time frame bread and butter, and then intraday stuff, usually 4-hour, hourly, etc., etc. So yeah, that's kind of thing I'm keeping track of at the moment. That this daily and weekly don't have any wicks. So if you're getting setups to get long, think that the first trouble area in either case is the weekly open, which happens to fall around the weekly midpoint anyway, at around 3,500 or thereabouts. But yeah, in terms of higher time frames, as we said, the weekly closed into resistance. Unsurprisingly, the daily did as well. So if I'm going to get long this market, potentially on the table there was this continuation setup from 35 into 38.40, but didn't get a trigger there because the daily and weekly failed to do their job. So the only thing that remains is the same as last week, unfortunately, which is being greedy and fishing for dips into 30k, 32k, and thereabouts. And even those trades, right? Like, it may seem like a very logical buy 32k and then the target's 38k, but in these current market conditions, like, I'm still playing very defensively, especially if the market's giving me signals like this of rallies being faded at the midpoint. That's not exactly screaming strength, right? So even if I'm going to be buying and doing business at support or at the extremes, I'm probably not going to be holding those for very long. So just even eyeballing this example, let's just take this weekly level at face value at 32k, and say the market comes into that level, maybe wicks lower and gives me a fill. My first trouble area isn't going to be, let's say, 35k or 40k, etc. My first trouble area is going to be the nearest level of what would then be broken support turn resistance at 33.6. So this would actually just be a short-term trade of buying the bottom of the range and selling the rip into the first level of resistance, right? Volatility is falling off. The way you actually lose money in a range is by treating it as a trend, which just means having extended targets and getting carried away. And as we've just kind of been making lower highs for the most part, at least with the evidence available, if I get fills at the extreme, I'm still going to be conservative, and I don't see a rush to go for a home run type of trade. I mean, I don't know. Maybe it turns into something that I want to hold into midpoint and beyond, but I'm at least cognizant that worst case scenario, if I get the type of bounce that I want, I'm not shying away from closing at the first level of resistance and then reassessing. I took the midpoint trading, got stopped out. What should told me not to buy it? I mean, there was no... So this is a weekly range midpoint. So if we're being very conservative, the argument is that you want a weekly close above the midpoint to set a weekly bias, and then you spend that following week fishing for dips in that area. As you can imagine, a lot of the time you get pretty slow and a low frequency of signals if you're being a time frame puritan in that regard, right? So on the daily time frame, so what you do to compensate for that is say, okay, it's weekly structure, but maybe I don't want to wait for the weekly close. But at the same time, if I go down to the 1 minute, that's just too big a leap trying to interpret the weekly price action on like the 1 minute time frame. So what's a reasonable compromise or middle ground? And one of those compromises is looking at weekly structure through the lens of daily support resistance or daily candlestick closes, right? So for me, at least, what kept me out of the midpoint trade was not a single. Again, bearing in mind it's weekly structure, I'm already taking some liberties by looking at the daily time frame. This fake out has already taken place, so I know it's resistance, fake out, and it's still resistance, right? So we know that you can get good continuation setups from this if you get resistance, fake out, and then another close above. Then that tends to be a good signal to trade towards the next level. But in this case, even the daily time frame didn't give you evidence of that level being broken. So my answer to your question is what should have told you not to buy it is the fact that it's still resistance on the daily time frame, and we're dealing with weekly structure. Craig, you always say first test, best test, but what with false breakouts? Because most false breakouts just go back to the OG side of resistance. How do you deal with it? If it's a failed breakdown or a failed breakout, and it goes back to the same level, as Donald said on Wednesday, it resets the count, right? It resets the count. So the example would be, you know, you got support, bounce, bounce, breakdown, fail, accepted back above. The fact that this bit of price action happened, the attempt to break from balance, no acceptance, and the reclaim of the level, once you get the reclaim event, it resets the counts, you know, whatever. 1, 2, you get this, and then this is once again the first test, best test. Hope that answers your question. Would have buying the first daily close through the weekly have been a fine trade before the fake out? I mean, structurally, yes, because I'm generally receptive towards resistance, fake out, close back above the level which has been faked out. That's generally a good setup. But as I said last week, I'm generally pretty shit at trading mid-range continuations into range high. So I think structurally, if you got a strong daily close here, and you like sent me a DM saying I'm long, do you think I'm an idiot? I'd probably say no. But in this case, you're getting weekly and daily close at resistance. Kind of unjustifiable to buy the level. In my system, at least. Which time frame is better for confirmation of SMP, SFP, and SR flip? So I don't really think confirmation is a useful tool for that. You say the 1 hour seems tricky, but it just depends on the time frame of your structure. Like, if you're trading a daily structure, then yeah, 1 hour will probably give you a lot of noise and signals which aren't great when it comes to confirmed flips, whatever that means. But if you're trading an hourly level and you get hourly closes, then that's more reasonable, right? Going off the low volume price action over the weekend, no one can predict what Bitcoin is going to do. Reviewing candles and constant support lines are just to convince ourselves we have an understanding. I disagree. I mean, I've had these levels on for literally months, I think, now at this point, and they've kept me pretty in line with the market. And even just reviewing very recent evidence of this supposedly low volume weekend, and I agree it was, by all means, any reasonable candle close system suggested that this was resistance and at least kept me out of longs, right? So I don't think it's totally useless. If the chart looks like this, and I would agree with you immediately that something's gone wrong, or my levels suck, or the market is just completely obtuse, right? Opaque, whatever, unintelligible. But I don't think it's as bad as your comment suggests, personally. Do you use close for or high-low for ascertaining the range? Close. So your plan now is pretty much buy a nuke in 31.5, 32, but planning to sell around 33.5 at first resistance. As I said before, I'm still open-minded to buying the range low or buying support. But at this stage, I probably wouldn't do it on a limit order basis. It would be an on-the-spot type of assessment. So normally, if I'm doing business at the extremes, I'm quite comfortable leaving a limit order in. But in this case, because we've been here like 50 times, it'll probably be a discretionary determination at that point. And as for the take profit, I mean, again, it depends. What I was mentioning earlier was that if the market is really weak, it doesn't have to go all the way back to the midpoint or the range high or whatever. So if I say get filled in a way that I'm comfortable at 32k, I'll be cognizant that it may just not be a swing and actually a short-term trade, and I might have to close it at 33k. So I'm just expressing an open-mindedness towards having to execute my shorter-term strategy as opposed to a swing trade like on the weekly time frame. Costanza, yeah, you're right. You said, what do you want to see with the spot buy there? A nuke and not a grind down? Yeah. Ideally, a very quick nuke from a higher level, and a lot of market selling into the lows, which gets absorbed. I try not to generally look at price action on lower time frames before entering. I mean, this is kind of the exception given the higher time frame context. But for the most part, I think a lot of people, on average, it's probably minus EV to write yourself off as, or write yourself down as some sort of price action expert, where you have like a high time frame level, and then you're some pattern god on the 1 minute who'll be able to ascertain a good entry versus a bad one. Most of it will probably end up being noise if you don't know what to look for. And certainly as a beginner, if you found the level where you want to trade, you're better off probably just trading it as opposed to waiting for a million different entry signals and confirmations and what have you, you know? So yeah, long story short, for Bitcoin, 35 still resistance. I wouldn't be surprised to see us trade back into it during the course of this week, simply because of that wickless weekly anomaly. There's a decent chance that gets kind of sorted out before the end of the week, but there's no guarantee. And a lot of traders who are expecting that same wickless bounce aren't feeling too great at the moment. So just something to bear in mind. I could start drawing like lower time frame levels, but generally speaking, it's not that interesting. My view remains the same. If I want good evidence of upside or an area where it makes sense to look for that type of positioning, it would either need to be daily close through the weekly midpoint or an actionable dip in the range low. For now, what we have to work with is just resistance at the range midpoint, and that's kind of it for the time being. Why wickless candle will be retested? I'm not saying it has to be retested. We started the stream by discussing wickless candle strategies on several time frames and pointed out that it's generally anomalous to have high time frame candles without wicks. So this current weekly is wickless and the open is at a key level anyway, and the same goes for the current daily. Wickless and the open, given it's Monday, of course, so just like the weekly, is at a key level. So generally speaking, I think any intraday long setups, it still makes sense as a reasonable first trouble area to target the open. But just like there's no guarantee that there's going to be an upper wick, it applies on the way up. That doesn't necessarily mean the market's going to go there. I just think it's contextually significant to bear in mind that we could come back to set that upper wick on the weekly, daily time frame, whatever. No, I don't generally market by candle closes. I don't. What would be a possible way to filter out false breakouts? I mean, most of the time, they become actionable after the fact. So you'll know it's a false breakout, and then it's what you do afterwards that matters. Certain other things you can use, like if there's a strong oscillator divergence that you know how to trade into a breakout, that might be worth fading. If you've got a very strong kind of derivatives-led move into a breakout or into a breakdown, which you don't think is going to stick, like among, you know, especially let's say you've got very high futures premium, high funding, and you get a breakout that's entirely derivatives led, you can use that type of context to tell you whether the setup's going to work or not. Time frames can also be helpful in that regard. So let's say you've got high time frame level here, right? And then you've got whatever low time frame consolidation into it. When it pops and hits that high time frame resistance, maybe you think to yourself, based on context, well, there's a high probability that this is going to be some sort of fake out from this range as opposed to a real breakout, because we're now reaching high time frame resistance. I mean, when it comes to how do you know whether it's a false breakout, it's kind of hard to do so in advance. Most of the actionable trades happen after the fact anyway, so you don't have to be able to predict the false breakout. It's what you do afterwards. But staying out of buying false breakouts, most of the time, that's just going to be determined by context. What's it breaking out into? What does the rest of the market look like? Who's leading the move into the breakout? It's those contextual determinations that'll probably be useful. So are some traders profitable using this wickless candle strategy? For sure, yeah, for sure. Don't ask me about stock to flow. I don't use it, don't think it's helpful. Not relevant to how I trade or look at markets. I've got nothing interesting to say about it. Hey Cred, how does Forex liquidity imbalance and so, I mean, it's just price action stuff packaged up in a million different fancy ways. So I'd say it all works, as long as you kind of understand the why more than the how, or the how more than the why, sorry. Yeah. Are there any questions about Bitcoin, or is that somewhat understandable? Yeah, we will look at DeFi stuff for sure. ETH and DeFi. I don't use volume to determine bottoms, no. How can you tell when people are just market buying or selling? There are a few ways. I'd say the most straightforward one is probably if you have certain order flow tools, like a footprint, for example, can straight up tell you what kind of activity is going on at a certain price level. You can also have Aga trade open, which will give you those ping noises when market orders are being executed and show up, straight up show you that feed. And so, for example, if you see a big nuke into a level, an Aga trade is going off, giving you mad pings, but price isn't moving down with those market orders, that's pretty good evidence of absorption at the level, right? A lot of the time, you can kind of just look at price. If you've got a very steep and very fast move, very likely liquidation driven into a level, you know that there's going to be a lot of forced sellers there, which are going to be market orders. So there are a few things. Why UTC? Because that's the time frame which determines all these candle closes. So midnight UTC is the daily close, etc. Is it a bearish sign that DeFi is doing well while Bitcoin ranges? I'd imagine Donald's argument is yes. My view is sort of, / I don't think it really matters. Costanza says, when would you cut your buy at the range low? I don't know is the answer. I don't know. I'd have to decide on the spot. It depends. But again, if I'm going to be buying nukes, I'm not using leverage. It'll be spot positions, so that gives me a lot more space to work with. You don't think it's bullish? This week's candle had a good response after coming close to last week's low. That doesn't mean anything to me. Also, this week's candle, I mean, it's Monday, right? It's Monday. This week's candle is currently meaningless. It's just not enough. It's not even nowhere close to being formed for me to arrive at any conclusions. based on the current weekly, apart from that potential wickless scenario. So when I'm looking at the weekly, the only thing I really have to work with is the most recent weekly close, which for me was at resistance. So that already means I have to be conservative and look towards the range low rather than the range midpoint. What do I think about these last hourly candles? Not a lot. This was crazy, right? This is what got a lot of the wickless traders stopped. Just, how many is that in a row? 1, 2, 3, 4, 5, 6, 7 red hourlies, more or less off the open. That's something. And then retested the cluster here as resistance. So fair enough. But I don't have any strong views as to this at the moment. Even just looking at my chart, right? You can see that this for me, where are my levels, right? Where are my levels? Interesting area to do business. Interesting area to do business. By definition, I don't really care about this. Do you give significance to the 3 progressively weaker pushes upwards? On what time frame? The daily or what? On the 1 hour. You'd have to show me exactly where and what you mean. But for me, the actionable information was weekly and daily close at resistance at the weekly midpoint. That kind of meant to me that continuation longs were off the table for the time being, and I just kind of have to look at the range low instead. I don't smoke. I'm sorry about my breath, I guess. Jesus. Guess I'm a bit close to the mic. For low time frame, if we reclaim 34.4, can this mean move towards weekly mid again? 34.4. 34.4. Where's 34.4? You mean this cluster? Yeah, maybe. This type of thing. But again, look at the space you've actually got the trade in that scenario. It's really not that much. So yeah, I don't want to drone on too much for Bitcoin. We've got ETH and DeFi to talk about. Long story short, high time frames suggest that 35 is still resistance on a weekly time frame. There's still a decent chance we trade towards it during the course of this day. This day or this week, because it's wickless. So I'm just bearing that in mind, and that's not where I'd put a stop if I were bearish, simply because of that wickless statistic. So still resistance until proven otherwise, but a retest wouldn't be completely out of order because of how we moved off of the weekly open. As for me, because the weekly closed and the daily closed as resistance at 35k, that really lowers the probability of me trading some sort of continuation from the weekly midpoint to the range high. It was already low because these setups tend to suck. Now that the weekly close was at this level, it's gonna, very low probability that I get a setup that takes me from 35 to 38.40. So what does that leave me with? I don't like to short the midpoint. Like, it could make sense structurally, but I don't like to diddle in the middle. As we said in the beginning, not a place where I find it sensible to establish positions. So really the only thing on my radar for Bitcoin is if it does 35 plus and moons, I'll be sidelined, and maybe I can do business at 38.40 for shorter term trades on the short side. Otherwise, the only thing I've got available to me in terms of my trading system is the good old keeping an eye on support at 32k to play some sort of bounce some sort of bounce could mean into the range midpoint, but it could also mean into literally the first level of resistance nearby. It really depends how this looks if it gets down there, and which of my strategies, the short-term one or the swing one, is more applicable to that type of move. I don't have a crystal ball, so I can't foresee all of that. Yeah, if we close above weekly mid on the daily time frame, right? The daily time frame's been pretty good with it. Support, resistance, fake out once, resistance. It's been really clear. So yeah, daily close through 35, still decent odds of moving towards the top of the range. It's just, again, not a setup that I like to trade, not an area where I like to establish fresh positions, and I'll be absolutely fine being sidelined on a move like that. Am I interested in low time frame price action? I mean, I am if it occurs at or around a high time frame area. And again, these streams are once a week, so I don't want to litter the chart with low time frame stuff, given million new levels will form between this Monday and next Monday. In the 24/7 market, when do you consider daily open and close? I mean, when it actually opens and closes. So midnight UTC. Do you ever get bored and apply your same system to a lower time frame structure? Very rarely. Certainly not in these market conditions. If the market's really strong and up only, down only, there's just like a lot of headwind or tailwind and very clearly moving in one direction, I can be a bit more liberal and move stuff down. But especially if it's like a piece of shit market, you know, you couldn't pay me enough to take trades in the middle of nowhere. Nonce Finance, yeah, it's a good meme from today. Anyway, that's Bitcoin. Let me know later if it didn't make sense, but yeah. Volatility falling off, 35 resistance, not proven otherwise. If 35 breaks and moons, I'll probably be sidelined unless I FOMO in a daily close or something. Otherwise, 30 to 32k, still support. I'm open-minded towards playing a bounce, just not on a limit order basis. That's it. And no, I don't think 27, 28k is significant, not for me at least. I think there's some yearly open stuff not far from there, but it's not a level I'd be rebuying personally. ETH had a better weekly close than Bitcoin did, which is interesting. If we take the most recent range and just have this as the lowest close and up here as the highest close, it looks like if this is support, close below, close back above, right? So just like when we discuss a range, you've got support, resistance, market makes an effort to break, isn't accepted, moves back up. The low of the excess portion or the failed breakdown generally sets your invalidation, and then you work on the assumption that support has been re-established at the original breakout level. And kind of same rules applies with first trouble area in brackets is midpoint and then range high as well. So on a purely on a weekly closing basis, ETH looks pretty reasonable, right? It's that same thing. Even if you take the clear inflection point of this higher time frame level, the weekly closes have all been above it, so that's good. And then if we give precedence to more recent structure, it looks like a breakdown which didn't materialize, and now that's support until proven otherwise. So if we overlay that and do something like this, nope, not you. There you go. And then take a daily view, that suddenly becomes pretty straightforward in terms of the levels we're dealing with, right? And I think last week we spoke about this cluster here, which has been acting, I think we talked about this type of setup, which looks to be intact, so that's fine. But even without using the cluster, it's the same thing, right? Daily, lowest close, support, breakdown, no resistance, support reestablished, and it's kind of already reached the first trouble area at 2400 or thereabouts. I know the range high here looks messy. I would personally be comfortable either using this highest close here, or I think the way we got it in the newsletter, is the most recent high before the breakdown. So 28, 2900, whatever. So purely in terms of range trading, a pullback back into 2K is support. Your swing trade invalidation is technically all the way down here, but can be adjusted on lower time frames. And then management spot is the range midpoint, but ultimately aiming for the range high. The reason I'm not rushing in to long ETH is because my Bitcoin directional bias is not aligned, right? So Bitcoin weekly closed below resistance, and the daily time frame, same thing, 35 as resistance, still proven otherwise. And when the market's like that, especially in the conditions we're in generally, I'm being super defensive or quite defensive. If I don't have alignment with Bitcoin, that's just about okay. But if Bitcoin is giving me the opposite signal that, hey, the market's at resistance, then I'm probably not just going to buy ETH or buy altcoins or whatever else. I'm perfectly content missing out on well, not perfectly content. I mean, obviously it sucks, but I can stomach missing out on a rotation from the range low into the range high. But if Bitcoin didn't exist, then we simply viewed this setup in isolation, then yes, you've got 2K more or less as your support. Technical invalidation is at the low, but there's probably something you can find a bit closer up. This looks a bit dangerous, but you kind of get the idea. Midpoint, whatever, 2400, and it's really this cluster of highs at 28, 2900. That would be the objective for such a move, right? If we're doing YouTube LARP squiggly line crap, it probably looks like this. Although we know that trading is very rarely that easy. But just to express the idea, it's fine. Does that make sense for ETH? And yeah, like the video if you've learned anything, or if you haven't. Hopefully you have. I don't think I've missed anything on the lower time frame side of things. Yeah. ETH's weekly close, better than Bitcoin's. And so yeah, those are the kind of the three levels. That's really it. 2100, 2400, 27 to 2800, kind of what I'm looking at. But given Bitcoin isn't part of the party, I'm not rushing in to long this. Maybe on an intraday basis, it's puntable, but kind of on a technical roundup as a weekly stream type of basis, I got to be a bit more careful in that regard. So, yeah, the lack of alignment with Bitcoin is a bit of a pain in the ass. ETH BTC. Kind of the same, right? Where we had weekly structure, bottom of the range at 55s. That held. And then if we take the lowest close, actually looks like a reasonable move, right? Breaks below the recent range low into the higher time frame range low and closes back above it. So from a purely technical, shorter term view, we're kind of in the middle now, as you can kind of see here. But assuming this is a breakdown into a reclaim, your technical objective is up there at 75s. So unsurprisingly, stronger move or stronger close from ETH USD. Structurally looks better than Bitcoin, and that's reflected in ETH BTC to some extent as well. I mean, we could start drawing random boxes to look for meaning in life, but this also looks like a reasonable version of that support resistance flip that we spoke about. Does that make sense? So just to kind of summarize quickly, BTC 30-40 range, stuck at mid 35. Whack weekly close, but wickless, so retest probable. Oops. Probable this week. Okay. Plan. Range low, punt and pray, and or in brackets, because low certainty, D1 close 35k plus, decent continuation trigger. Okay. ETH. What was our range again? Hold on. ETH 2.1k to 2.78k range. Reclaimed range low 2.1k. First trouble area 2.4k. Plan get sidelined because BTC isn't playing ball. Maybe short-term punt from support if appropriate. Ideally, BTC and ETH confluence, but BTC stuck at res while ETH isn't. Piece of shit crab market. No way you force me to rush into suboptimal positions. Does this make sense? And yeah, okay, cool. Thank you for 200 likes on the video. That's terribly kind of you. I don't need a lawyer to sit next to me for this. I'm just literally drawing lines on candlestick charts and hallucinating plausible interpretations of what I may do myself, potentially, in a possible world. You have people shilling you unregistered securities as investments on your feed, exiting into your fucking liquidity when they're up 50x, and I'm the one who needs a lawyer. I somehow doubt that. Not financial advice, though. You know? Allegedly in-game in Minecraft. Yeah, of course. Altcoins. DeFi's been doing well. I know the index is imperfect, and there's a bit of divergence even among DeFi in terms of how stuff is performing, but it's not a bad thing to look at. It kind of looks like ETH, right? Whereby you have the lowest close as the range low, highest close as the range high. Now this is like okay. Part of me, like, I can totally see a world where this counts as a close at resistance and we end up nuking. But currently what we have, you know, in front of us is it looks fairly decent in terms of a higher time frame reclaim. And the objective for such a move is towards 10k, right? And you can kind of see that here as well. If we take that same range low level from the weekly, it fits quite nicely onto the daily. Maybe we even just box out the pre-breakdown cluster here and say close through there and then no closes below. That would then be a valid high time frame reclaim, and you play that towards, I mean, your really strict first trouble area is 9k, but just like ETH, it's got this like triple top messy structure going on, which makes it a slightly more appealing target. So it looks like a reclaim at the range low for a move into the range high, but I'm somewhat hesitant because it's not like the weekly time frame completely smashed it and then it looks like we're going to teleport up. It did close above the level, but it's not like the most compelling or perfect thing in the world. So I'd probably box out this cluster or consolidation, and any weakness or closes back below it would be a kind of, oh my god, it was probably a trap, let's get the fuck out type of signal. But otherwise, as long as Bitcoin doesn't pull the rug, I think that there's some space to continue creeping up in DeFi. I'm like medium conviction on this, if that makes sense. Yeah, medium conviction on the thesis that DeFi reclaimed high time frame support, and there's some space for price to move towards the other side of the range, resistance, whatever. But yeah, I just know, you know, for those of you who care about the distinction between strict TA and then what I'm going to be doing, I know there are like 2x's and altcoins going crazy in some regards, but I could not care less about altcoins with where the market is right now. I honestly don't care. I'm not going to trade them. My entire focus is on Bitcoin and to a somewhat lesser extent ETH, and that's where I'm deploying my attention, resources, etc., until there is a high time frame view that's quite obvious. I haven't given anything back this cycle, and I'm not going to donate anything to the crab, and I don't want to donate anything by buying shitcoins before a potential rug pull. And I feel there's another asymmetry that's kind of built into punting altcoins, that if the market nukes, they'll nuke as well. But then if Bitcoin breaks out properly, there's a good chance that altcoins nuke as well. So if kind of any volatility in Bitcoin will nuke altcoins, in my opinion. So that sets quite a narrow window to do business in alts, and it's just kind of not enough for me. Does that make sense to anyone? Okay. So any volatility in Bitcoin will fuck up altcoins, and that seems to me to be like a narrow window, and I don't want to be on the wrong side of it, which is why I'm not really paying attention, to be completely honest. Nuke, when I say nuke, it's number go down, and moon number go up. I'm not a BTC maxi, man, Jesus Christ. Yeah, YG, I agree. I conceded very early on that there are a bunch of trading opportunities in these, and even the shorter term bounces are like pretty significant in terms of percentage moves. But I'm looking at the bigger picture, and I'm not compelled to start trading altcoins at this point. You are Donald's apprentice, so you are BTC maximalist by default. Man, I love hearing this kind of shit when I had my entire net worth in FTT for like months of the bull market, and then being called a maxi just because I don't want to gamble after the whole market got nuked and Bitcoin is like compressing for a high time frame move, which either direction will nuke altcoins. So yeah, look, I'm not an idiot. I know there's a lot of bounces and stuff is going up, sometimes with a lot of size. Sorry, a lot of, big percentage moves. Like Ledger was shilling comp at 220, 240, and it more than 2x from there. So I get it. It's just the question is, in what set of circumstances do I want to trade altcoins? Well, my current thesis is that any Bitcoin volatility will be bearish altcoins, right? Then the question becomes, how close are we to Bitcoin volatility? Well, to me, it just seems like the range is only getting tighter and tighter, and the big move of some sort will happen eventually, right? Or sooner rather than later. And whether it goes up or whether it goes down, irrespective of the outcome, altcoins are going to eat shit in that set of circumstances. So the window in which it makes sense to divert attention is pretty narrow in my mind, or at least too narrow for me to care about. You are Michael Saylor until proven otherwise. Yeah. Do weekly mid ranges typically cause this much trouble, like we are seeing for Bitcoin? Only if the market's weak. So another example of mid range causing a riot, if my memory serves me correctly, was between kind of 50k, that consolidation. Highest close, lowest close. I think 51 nuked the market. Yeah, it did. Obviously, I'm not making a direct comparison between the range we're in now and the larger range between 40 and 50. And then obviously there's a difference. Might cut out. Obviously, there's a difference between kind of bouncing from the range low and finding resistance there, as opposed to coming up down from the range high and finding resistance. But either way, if the market is strong, you expect the range low to be bought, the range midpoint to be overcome, and then eventually for the range high to break. So the question is it a bad sign when a market struggles to break the range midpoint? And generally, yes, right? Because you'd hope there's enough buyers at the lows to take it to the highs, and this should be nothing more than a speed bump. So same applies for 35k. Ideally, that should be a speed bump. If we break above it, there's whatever space to go up. Although, as I mentioned a lot of times, I'm shit at trading that setup. I'm not really expecting it. But the most imperfect but somewhat relevant analogy I can come up with is this 51 level as part of this larger weekly range, where we had range low, stayed untested for a while, this grindy price action through the 60s, and then once we nuked through the midpoint, that's where we found resistance before eventually breaking the range. So if I wanted to be intellectually disingenuous, I would say that, hey, look, Bitcoin's finding resistance at 35, just like we found resistance at the range low, at the range midpoint here, and then that's what caused the breakdown. So this is going to cause the breakdown. I don't think that argument makes sense because the context of how price got to the midpoint is quite different. But I think the general inference that you don't want to be finding trouble in the middle is a reasonable point, I think. I'd be interested to know, what range of leverage do you usually trade with? All of it. I use all the leverage, whatever they'll give me and more. Yeah. No, my mic wasn't cutting out. I was just in disbelief at the fucking questions. I don't need a new mic, trust me. I'm fine. Okay. So that's really it, right? The whole point of these streams is for me to be as whatever frank as possible, and not make shit up, not share stuff that I'm not really going to trade or stuff that I don't find compelling. I just kind of share my process, my trades, what's on my radar, what I'm looking for, what makes sense to me, and then try to answer relevant questions to that. So what's on my radar is 35k Bitcoin resistance. Getting stuck at the midpoint sucks. Retest at some point is likely because it's wickless but not guaranteed. From trading point of view, yes, 35 plus into 38 and so on. Could set up, probably not going to take it. If you want to give me a nuke into support, I'll play some sort of bounce. Not on the limit order basis, but on a wait and see basis. Ideally, I want to see a straight, scary looking nuke, rather than a drift or a grind of some sort. ETH closed better than Bitcoin. I'm working with 3 levels, as we've discussed. 2.1, 2.4, 2.7, 2.8. But being totally frank, again, if Bitcoin doesn't start looking good, then I'm probably not going to be taking bullish setups unless they're like really short-term trades. Like, for example, buying a nuke into this support and then selling it at the first intraday level. So it'd be a very short-term bias if there is one. Altcoins, I'm cognizant that a lot of them have gone up a lot, but I think the market's at a point where any volatility in Bitcoin is going to nuke altcoins, whether that's a breakout or a breakdown. And I just don't see it as a hugely attractive window to be chasing or positioning for continuation after a move like this. I'm comfortable saying that last week was really good for altcoins. This week could be very good for altcoins. But because of the risk posed by any range breakout in Bitcoin, I just don't care. It's that simple. I don't care. I don't care. I'm in full capital preservation mode. I'm only interested in taking very high conviction spot trades for Bitcoin and ETH. I'm not trying to make anything back from the top because I didn't give anything back. I'm being super selective and frankly focusing on other stuff. I know that's really boring and bland, but it's honest, which I think is slightly more important. And yeah, there's a new horizontal SR video coming out this week, unless something goes terribly wrong, and that'll be on the CryptoCred channel. So keep an eye out or an ear out for that one. Should be above average. Four-hour closed? Yes, it did. I don't want to go to Bali with Don. Don is just too cool, right? He likes active stuff. He likes like surfing, skiing, fucking climbing, other dipshit activities. And I'm just a lazy piece of shit when it comes to holidays. I want to lounge around and I don't know. It's just not my cup of tea. So I'll let him be cool and active and stuff. I prefer other forms of leisure. Indoor bouldering, nah. Miss me with that. Okay, in terms of other news, so as I mentioned, new video this week on my channel. We're going to have a podcast interview with Matthew Graham. You'll know him as Matty from Twitter. He's going to talk to us about VC, crypto stuff, China regulations, all of that interesting content. So that'll be a good one. And I suppose the third point is that there's a chance that Monday Markets stops and gets replaced with some other form of content, potentially more frequent kind of short Twitter clips as opposed to the Monday live streams. So I'll keep you updated in that regard. But yeah, it's just, yeah, it is what it is. That's all from me. Make sure to get Blockfolio and only open it on days when the market is green. That is, as I've discovered, the cure to any concerns about your portfolio. And if the market's red, you don't open the app, unless it's to buy the dip, unless you're buying the top when you think you're buying the dip. Otherwise, totally appropriate in all circumstances. So thank you for them for partnering with us. Get the mobile app, sell some shitcoins to your friends, and then delete their contact if the market breaks support. It's pretty straightforward. I've done it multiple times, and I'm a very happy person for it. Lots of content to look forward to this week, so be there or be square. Thank you for hanging out, and I will see you next week, or not, because Monday Markets may be taking a bit of a hiatus. So take care, and see you next time.